Hi, everyone. My name is April Rudin, and I'm the founder and CEO of the Rudin Group, a wealth management and wealth tech marketing firm. And I'm excited to bring you another interesting episode today of LinkedIn Live, where I'm joined by a couple of experts here to talk about retirement. So, Rich, can you introduce yourself?
Sure. Hi, everybody. My name is Rich Kellner, and I'm the Director of Product Management for Tiger 118, and I'm responsible for our portfolio management and wealth advisory applications. Thanks for having us today.
Yeah, Michael?
Michael Roth, head of retirement at Tiger 118, and I run right now the planning for Retire Up division.
So we're here today to talk about retirement, which is one of those topics that I think people either love or hate. We have a lot of market volatility now, health crisis, things going on in the marketplace today. And advisors are always asking me what can be good conversations or positive conversations that they have with clients. So, Michael, how do you see the retirement conversation changing today?
Well, I think there's two aspects. The micro aspect, which is, you're in the middle of COVID, right? And from what I'm hearing in all my conversations and experiencing personally, really the conversation, it's so immediate now and it's so emotional and real and raw, right? Yeah. So instead of this esoteric, talking about when you retire, now there's a lot of job uncertainty, right? The conversation is a little bit different where people are pushing back retirement because of the fear related to it. So it really has lent itself to a lot of different variables that are affecting the situation. And if you look at on the macro side, 1935 Social Security came in, post World War II, we built this three-ladder stool, right, where we have pension and we have Social Security, and then we have personal assets. Well, now pensions going away, Social Security in the future past 2035, who knows? So it's been all built around this personal assets of savings for retirement, right? And what that has created, this is not a static retirement age. There's this evolution happening where retirement's very dynamic, where people are kind of going in and out of retirement. You've seen the gig economy come into play. And then you're also seeing this manifestation where people are not really just clearly retiring. They're working. It changes and evolves as they get older and older. And what that means then is that the advisor has to dynamically adjust and personalize that conversation, with that client because things are changing at a very rapid pace.
Let me ask a follow-on question before we get to Rich on that. So you mentioned that in some cases retirement's being postponed, but I think in some cases retirement's being accelerated while people are at home, and that presents a whole different set of circumstances.
Absolutely, it's a great point. You have this. It's for those who can choose to work longer, they're working longer, but then they've seen this furloughs, and then what do they do about it, right? And part of that problem as well is there's been a lot of evidence, Fidelity kind of brought this to us in 2016 around even the Gen Xers in their prime years of 40s and 50s aren't saving enough to kind of position themselves into retirement. And with the loss of pensions going away, there's this massive, lack of income and stable income coming through for these times of furloughs where we really are facing an issue. And we have a massive gap in assets for retirees. And also we have a large population of retirees. So I think there's a lot of forces in play where the COVID plus the market dynamics and what the overall economic dynamics are looking like is creating a lot of complexity for a financial advisor and for investor.
Rich, what do you see from your point of view?
Yeah, I agree with everything that Michael just said. And if you look at kind of what the advisors are being asked to do is to provide tactical advice, whether it's how to best address sudden unemployment, should they take a distribution from their 401k, how to deal with potentially healthcare costs that may not be covered. So if you look at kind of what advisors are having to deal with, it's immediate tactical advice on how best to kind of withstand not only kind of what's going on with COVID, but unexpected unemployment situation, how best to kind of withstand this short-term blip so that they can kind of stay on track for their longer-term goals, whether it's retirement, funding, and education. So I think that there's never been more demand for the interaction of advisors, but it certainly needs to be highly specialized, give them tactical advice that is really specific to their unique circumstances.
Yeah, I mean, as an industry, we've moved to holistic financial planning, whatever that definition is and whatever that means. I mean, Rich, what is, holistic financial planning in 2020? How has that been redefined?
In my mind, there's a real danger when we talk about holistic planning is it's a buzzword, and everybody kind of talks about it. But if you really look truly, what is holistic planning? There's a lot of different definitions. I think that there's a tendency to just check boxes. If you're an advisor, you're just kind of checking boxes, whether it's an education goal or retirement. That is not, in my mind, true holistic planning. Holistic planning is very specialized advice that not only kind of incorporates retirement goals and aspirations, but all of the other unique goals that a client may have. So, in my mind, it's just a natural extension of really good, adequate financial planning, incorporating a lot of different goals. But it is not checking a box. It's just highly personalized advice that's specific to that client.
Yeah. So, I mean, our advisors are always looking for opportunities, right, to begin conversations with clients and to deepen their relationships. I mean, how can they really use this as an opportunity to initiate conversations, to sort of calm people on turbulent times, whether it's health or financial crisis or whatever? How can investors really help? Advisors really help investors help their end clients at this point in time. Michael, maybe you can talk a little bit about that.
Yeah, well, one of my best friends is a financial advisor, and I was talking to him earlier this morning about some other stuff, and he mentioned though, like just what he's been dealing with. He's like, Michael, I'm a financial advisor, but what that also means is I'm a marriage consultant, right? I'm a personal health coach, right? So I think the advisors, this is the time where you have a whole, we've built a society now within America around customization and personalization, right? And then you flood this uncertainty and fear into the world. Now you're dealing with, as an advisor, there's a huge opportunity to truly add value. No longer is it, an annual meeting a year. This is a continual personal relationship that you continually are approaching with them. And it's a complex understanding from the advisor side of what solutions, what tools, what lifestyle, how can I help those goals be met? So we're not benchmarking to the S&P, we're benchmarking to your goals. And I think that's a huge dichotomy that has shifted within the market. If you look back, 10, 20 years of how advisors deal with clients. And part of that includes looking at different, retirement income products. And there's been a lot of innovation coming in that space. You're seeing that also in the defined contribution space as they add new solutions. But the other aspect, again, is really understanding your client and dynamically, on a monthly basis, a weekly basis, understanding kind of where they're at and where they want to go. Because in a time of uncertainty, any certainty an advisor can provide for them, whether it's guaranteed income or it's safety nets within the goals, I mean, that's really adding a lot of emotional value on top of financial value to their clients.
Yeah, 100%. Rich, how does technology play into all of this? Guaranteed income. I mean, I think that's a natural question here.
Yeah, absolutely. It's interesting because I think that you can break people down into really two camps with their financial advisors. There are people who have been working with their financial advisors for a while before COVID who are really well structured to kind of withstand kind of this short-term blip that we're having right now. So they had the protections of guaranteed income in their portfolio, so that they had not had to go and kind of pull the fire alarm to sustain their lifestyles. And then there are others who were not ready for this, who are working with financial advisors now to kind of close the gaps to make sure that their short-term kind of liquidity needs are being addressed while we work through this in the economy. So from a technology perspective, tools and applications that allow them to kind of figure out what their income needs are going to be, and then kind of linking these up to various assets that generate income, so that regardless of what's going on in the overall economic cycle, that their needs are met, that their bills are being paid, that their goals are being satisfied. Technology can really help make those things happen.
Michael, do you have anything to add to the technology side of holistic financial planning, particularly retirement guaranteed income?
Yeah, so if you look at the demographic moving Xers and especially the millennials, right? We've grown up on technology, and that is a huge shift. And so the advisor's value, right, is that relationship. And what technology can do is be the conduit to help explain the complexity of retirement, whether it's the deaccumulation phase, whether it's, lifetime income products, and tell that in a simple narrative. And you're seeing that within like lifetime income products that are coming into play. What you're seeing is that those stabilization, communicating and articulating what these retirement products do within the context of an overall client's plans and goals with risk of inflation, COVID, taxes, those type of things. Technology can actually clear the conversation where you take the complexity out of it and tell it in a simple way the advisor can communicate and the client can understand.
I mean, there's a generational story here too. I mean, yes, millennials and Gen Xers have more time, obviously, and a greater time horizon to plan for their retirement. But pre-retirement and boomers, as you mentioned, there are people in the retirement phase, right, who are affected by this, and particularly financial advisors. I mean, Rich, when I think about the average age of a financial advisor being, in the late 50s, something like that, early 60s now, they're facing their own retirement. How can technology and how can these times really play to their benefit?
Absolutely. And we all know testimonials, add a lot of value to your advice. And when you're somebody who's taking your own advice and demonstrating it in your own financial lives and being able to kind of demonstrate that with your customers, that's very powerful. And that really kind of helps kind of gain the confidence of a client and also kind of really reinforce the value of your recommendations, their credibility. With their clients is really reinforced when they're doing it. So talking about real world examples that it kind of apply to their specific circumstances, I think that is really something that gains the trust of the client and it kind of allows them to kind of have comfort that the recommendations that an advisor is making on their behalf are in their interest. So for example, being able to talk about utilizing structured products like an annuity to close income gaps. I mean, we're all dealing with uncertainty right now with COVID. We don't know what's going to go on with the capital markets. We're seeing wild swings. But talking about the utilization in your own personal lives as an advisor of bringing these instruments into your broader portfolio to kind of close gaps, that in my mind, it adds comfort to that client. But also, I think it's a really a good example of how they can use the tools at their discretion to also improve their lives as well as those of their clients.
Yeah, I sort of love that touch point, Michael. What do you have to say about that?
Yeah, I was when Rich was expanding on that, the one thing I was really thinking about too is where if you kind of look at 2018, right, we didn't have this insane bounce back like we had with COVID, right? And so it's not an investment allocation conversation anymore. It's a very personal conversation around lifestyle and life balance. And it's this overall theme of wellness that we're hearing across every industry, right? And technology really is on the forefront of trying to solve for that in aggregate. And so I think kind of what Rich is hinting at is that there is now this conversation that advisors are having outside of just how are we going to allocate your assets to how are we going to make your life day to day better to put you in a position to live and thrive within life. And I think it's a totally different conversation where advisors have to adjust within it. And I think technology is also going to be a huge conduit for that.
Yeah, no, I would agree to that. And Rich alluded a few minutes ago, he talked a little bit about annuities. What sorts of products and how has the product marketplace really changed? Rich, maybe you want to go for this first.
Sure.
To be able to help advisors, and given Reg BI as a backdrop and all of that, how can advisors choose the right products and what really are the right products? And how does technology play into that? I guess I've got a lot of questions here.
Yeah. So in my role today, I mean, traditionally I've worked more on the advisory side. So I have familiarity with, Rep as PM products and things of that nature. And a trend that I have been sensing over the last couple of years, and really COVID kind of accentuated this a little bit, is the introduction of brokerage products to help kind of close income gaps. So when we kind of look at kind of emerging trends that we're seeing, definitely an increase in interest around fee-based annuities. So taking types of products that you would traditionally see more on the brokerage side and seeing those more in an advisory setting. We're certainly seeing those. So I am getting a lot of questions from advisors right now about including fee-based annuities in their advisory products, but also in their platforms, but also utilizing structured notes, more traditional variable annuities, but then pulling that all together into that one financial plan so that it's more comprehensive in nature. So emerging trends that we're seeing over here at Tegra 118, the utilization of fee-based annuities and traditional advisory products, but then also kind of, you mentioned Reg BI, doing this in a way that satisfies the Reg BI regulation and making sure that the inclusion of these instruments is in the best interest of the client and that the advisor can demonstrate that. So a lot of interest from our clients in these types of instruments and expecting that to only increase post-COVID.
I mean, what an opportunity here, Michael. I mean, is this not the perfect storm for advisors to connect with their clients, make a difference in people's lives? Is that not what we're here for?
Right. Absolutely. This is the perfect opportunity. And I think just to touch on what Rich said as well, there's so much product innovation coming, especially when you look back in the last 3 to 5 years. There's also now been conversations around these, annuity products becoming potentially a sleeve within the overall portfolio, where, 10 years ago that would be shunned. And the innovation around where, buffered products called RILAs within the space, the momentum that they're getting in the space and how they're kind of being able to be allocated within a portfolio. A lot of that is kind of putting annuities in a new light, and also will help provide value. Again, if it makes sense within the context of the client's plan, will provide value for that income stability and retirement that, we're all looking for.
So, we're talking about retirement conversations here and how they're different based on technology. And a lot of these, or some of these conversations have stemmed from crises in the past. 2008, boomers and pre-retirement investors have certainly seen some of these scenarios, but for millennials and some of the younger Gen Xers, this is a brand new crisis.
Yeah.
What can advisors do to really sort of, quell their fears here and make things a little bit more palatable from their standpoint? Any suggestions, Michael? Sure.
Yeah. Well, I want to hear your opinion first, April. What would you like as a client from an advisor?
Yeah, so I think there's a great question. There's a great opportunity here for education, and through multiple channels and multiple ways. I think that we would all say that as a society, we could do a better job with financial literacy, from basics to, even more technical information. And so I think those advisors who can offer up different opportunities for their end investors to learn more and take a more active role in their own portfolio. Someone once asked me about impact investing, and I said, well, the impact is really on the advisor, because you should have your clients more involved, and it's more of an even playing field rather than the advisor being up here and the client being down here, right? Yeah. What do you have to say to that, Michael?
Well, it's funny because, from that is literally the thesis of when we talk about retirement planning with our clients, and we talk about our technology. We focused on that co-piloting, right? An advisor shouldn't tell me what to do. I'm the one making the sacrifices. It's my money. It's my life. What an advisor should do is say, okay, what are your goals? What's realistic? Now, if retiring at 55 is very important to you because you don't like your job, all right, are you willing to sacrifice through saving more? Are you willing to sacrifice through living on less income? What does that look like? And I think that co-piloting of building out a plan that's very dynamic, very personable, and is interactive, right? It's not a one-time, this is it, great, see you in a year from now. So I think I definitely agree with what you said.
Yeah.
Rich?
The only thing I would add to that too is that for those of us who lived through 2008, we know that it will get better eventually. And I think that, Michael alluded to earlier, that the role of the financial advisor is as much a counselor as a therapist as it is somebody who's providing recommendations. So I think one area where they can provide advice is, okay, well, let's talk about what's going to happen after this ends and where there are opportunities for us to either get back on track or to even, potentially, take this moment and to be in a better position after it ends. So I think that being able to provide kind of that perspective of having lived through it, having survived it, but also thrived post-COVID, I think that is an important where advisors can also provide a lot of value to their clients.
I agree with that, and I think that's where technology can help. I think one of the things that all of us can agree on is that there's just a lot of uncertainty. There will be post-COVID, but we don't know when post-COVID will be or what post-COVID will look like. And different from 2008, which was, an economic crisis.
Right.
We now have a health crisis and an economic crisis, which just adds to the opportunities for planning and, lifetime income. So, given the fact that we have these two aspects here, and then the perfect storm, as I mentioned before, with Reg BI, I can just see, and maybe you want to weigh in again, Michael, advisors really having that opportunity to co-pilot, and what advice can you give them how to begin these conversations, right? It's not that yearly meeting that everybody's used to. It's not going over your portfolio. What are your thoughts about how to even approach clients with that meeting?
Yeah, so I think I love what you said, because when you kept saying the word opportunity, and I honestly think, this COVID in that sense could be, an opportunity for these advisors, because if you look at the fee compression, and I know I have a lot of financial advisor friends who are facing that. Millennials know the fees. They know why you think Acorns and Betterment and Wealthfront are all coming to the table, right? Because we're very aware of the fees. It's, we're educated to that concept. And so now it's like, okay, why am I paying you? And then you start interacting, and an advisor starts having that personal relationship on a very continual basis, whether it's monthly or biweekly or whatever that looks like. We all know what, people pay their therapist or their medical doctor or their personal trainer or whatever it is, right? It's a lot of money. So an advisor coming in and being that involved with the client, maybe it's not always financial, but in some sense it's going to touch that. Being involved where the client is no longer asking, what am I paying you for? What are these fees for when I see you once a year? I think the value becomes even to a greater degree. You can actually articulate more and more for what they're providing. So I think that's a huge aspect. And as an advisor, I think it starts with actually caring for the client, right? No longer looking at them as a book of business. It's no longer just a trail of basis points that I get, right? Now we're starting to discuss, okay, how can I help you? How can I work with you to make your month, your daily life better, to hit the goals that you achieve, and not just looking to benchmark an S&P and sell myself at once a time every year.
Yeah, I don't think there's ever been a better opportunity for advisors to demonstrate their value to clients right now. There's so many things that they can help them with. Again, being not only a therapist, but helping them navigate through this. And those advisors who prepared their clients before COVID to kind of withstand this, they're going to have massive client loyalty. I mean, in my mind, I can't imagine a better opportunity right now for advisors to go out and extend their value. They have to do it smartly. And they have to really kind of point it specific to their client's circumstances, but never been a better opportunity for advisors to show their value.
I couldn't agree more. I mean, I think, one of the questions I get in my practice all the time is how to approach this and what to do. But this is the time for client communications. It's not a once a year conversation. It needs to be initiated by advisors instead of sitting behind your desk or behind your kitchen table, as the case may be, and waiting for someone to call. I think having a really proactive plan to reach out to your clients and bring these conversations to the forefront really makes a lot of sense too. So Reg BI, DOL, all of these things have just become an even greater reason to have more and more frequent client communications. And I think technology can definitely play a role in that as well. I mean, Rich, what about robo-advice? How does that fit into this new scenario?
That's interesting. Robo-advice, as it relates to this scenario, I think it showed kind of some of, I don't want to say deficiencies, but some of the areas where robo-advice does not necessarily fill the gaps that traditional advice would support. So robo-advice is good for asset accumulation and things of that nature. And you can even use it to fund specific goals. But what it can't do is talk you through those things that I referenced earlier in terms of what are the best tactical things I can do right now to get through this crisis. So robo-advice has done a lot of really good things in our industry overall. They've brought automation. They've brought some new practices that we're kind of integrating into the mainstream. But at the end of the day, I think it's also showed the value of traditional advice as well. And one thing I wanted to hit on as well, client communication is essential right now. Staying connected to your clients is important, but also understand they're being inundated right now with just a constant stream of news, whether it's around COVID or the election or just general uncertainty. It's important that the communications are really specific to their needs. Help them kind of understand what's going on in the world, but how it really impacts them specifically. That is essential to really adding value right now to clients.
Yeah, I would really underline that. Michael?
Yeah, it's so a huge kind of just evolution I've seen in the space in the last 3 years for me personally was, asset managers are now coming to us and saying, help us tell our story through your technology. And what's that telling me is that there's plan participants and there's clients or investors who need help to be educated around how do we tell this story, right? And so these asset managers are trying to help them not for just a product specific sale. They're actually trying to help them articulate, okay, given all of this, here is our story within retirement. Here's our thesis on how we can add value. And we're going to use technology to tell that story in a way that the client can understand. And that's been a huge movement I've seen specifically in the defined contribution space.
Yeah, so I feel like this is a great place to wrap up our conversation by saying what a fantastic opportunity it is for advisors to connect with their clients. Of course, it's devastating to many families who've been impacted by COVID, and so we can't say it's a great time in our lives. But on the other hand, I think it's a great time for advisors to show their value to their clients and create more and deeper, stickier relationships with their clients. Any final advice you have on that, Rich?
Yeah, absolutely. I mean, going back to just, this is a really, I mean, it has been a terrible time right now in terms of COVID and kind of the implications for society afterwards, what we're all trying to grapple with. But there's just two things. One, this will end. And I think on the other side of this, the industry is going to be transformed. And the positive silver lining to all this is I do think that the quality of advice that clients receive from their advisors, the types of interactions that they have will be more meaningful and specific to them. And that is something that I think the industry has been moving towards for a while, but I think COVID has in some ways accelerated the needs of advisors to have specific conversations for clients. So I can't wait until we can go on vacation again, so we can walk around without masks. But until then, I do think that advisors will be able to continue to support their clients as long as they are personalized and specific to the needs of what they are.
Thanks so much, Rich. Any final parting words here, Michael?
Yeah, just, I came in the workforce right before 08 in 06, and I watched during 08, my grandfather, 2 siblings, and my parents lose everything. And so retirement's near and dear to my heart when it comes to pre and post. And it's very, very important. And I think although COVID will end, I think post-COVID life is very enigmatic, what that's going to look like. And you're seeing already businesses make changes and decisions that are not the way they were making them prior to COVID. And I think that as a result, the power and the value that an advisor with technology can provide together to provide that peace of mind and control the variables you can control and mitigate the risks you can mitigate, I think you're going to see a whole new breeding of technology and innovation that will help the advisors leverage that to help their clients, have a better future.
Well, thank you so much, Rich and Michael. I've really enjoyed this conversation. I look forward to future conversations. Thanks to all of our viewers for joining us today. And where can people reach you, Rich, if they want to?
Sure. My email address is richard.keltner@fiserv.com. I'd love to connect with you over LinkedIn as well and to continue the conversation.
Michael, how can people get in touch with you?
Yes, michael.roth@fiserv.com, or reach out to me on LinkedIn.
Same here, April@therudengroup.com, or you can find us here on LinkedIn. So thank you all for attending and have a wonderful day.
Thank you.